Hello everyone, George DeSantis here with the look at the market for the week ending February 24th, 2017. Let's begin by reading the disclaimer as we always do. Trading and investing has large potential rewards and large potential risks. And this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risk and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. I am not an investment advisor. Let's begin by taking a look at some of the charts, beginning with the monthly chart of the S&P 500 as we usually do. Okay, so here's that monthly chart of the S&P 500 that we look at every weekend, and it gives us the bigger picture as we usually point out. Kalman filter, that yellow line is above the instantaneous trend line. It's a trend indicator and developed by Dr. Ehlers, John Ehlers. And so the trend is up on this monthly chart. And we know that, I mean, since early in 2016, we've entered this uptrend. Right now, we can see that for the month so far, we are closing near the highs. That little pip on the right side, for those of you who are not familiar with these bars, indicates that the market is closing at its high, which is quite bullish on the monthly chart. Now on MACD below here, MACD is trending up from below the this zero line, and it's making new highs. At the bottom of the chart, Elder Force Index has broken this trend line here and continues to trend up. So the monthly chart is looking really very strong still, which tells me anyway, that even though there are indications of a correction in the works, as we'll see later on, that should not be a major or significant correction. One last thing to point out here, well, a couple of things. The parabolic is below the most recent bar, so there's no indication to reverse this indication of an uptrend. And secondly, I put the Bollinger Bands here. Bollinger Bands set at 2 standard deviations above the mean. And you can see that the S&P on the monthly chart is riding, as they say, the upper Bollinger Band. That's pretty bullish. Let's take a look at the weekly chart. And this is the weekly chart of the S&P 500. Again, I put the Bollinger Bands on, 2 standard deviations above the mean, 2 standard deviations below the mean. Now, what we have here is the Kalman filter is still trending up above the instantaneous trend line. Since November, as it crossed above it again in November, this has been in an uptrend. Now, interesting to note that we've had a couple of gaps. 2 weeks ago, we had a gap up. We closed here and we opened higher, so we gapped up. We closed here and we opened higher, which is another gap up. So this market's been really strong. It's almost scary in a sense. We'll see on the daily charts that there's some indication of a pending correction. But in any case, as of this chart, on the weekly chart, we're still looking very bullish. The parabolic is below the most recent bar. And we noticed that we just came out of a squeeze of the Bollinger Bands. Bollinger Bands narrowed here, and now we're riding the upper band, which is quite common. You saw it here, you know. Now, Percent R is remaining in very bullish territory. It's above 80%. I use Percent R with a 30-day period to give me an indication of the momentum of this move, of this uptrend, and it's pretty strong. We can see that here. Now, RSI 12, which is that trend indicator too, it remains above 60%, and when that is so, no doubt we're in an uptrend. So MACD, of course, is continuing to trend up. And as I discussed last week and for a couple of weeks now, since this bearish divergence of MACD occurred when we made a higher high and a lower high here, we were sort of expecting we might get a pullback, but we didn't. In fact, it looks as though this move here, this low, this high, this lower high wasn't so significant. And so the market completely ignored it. And now we're at higher highs. So the weekly chart is looking very bullish, guys. And that's the monthly and the weekly chart still looking pretty bullish. Let's take a look at a daily chart on the S&P. And here's a daily chart of the S&P 500. We can see here that, again, I have the Bollinger Bands on. We rode, the price rode the upper band here, the upper Bollinger Band, consolidated for a couple of days, and then we had that holiday on Monday. Then we gapped up, and now we consolidated again. Okay, so we had a hanging man on Thursday, and on Friday we opened low and closed high. So this is also a bullish engulfing candlestick because the body of this candle totally engulfs this body here of the so-called hanging man. Looks like a hammer, but at the top of the chart it's a hanging man, which is bearish, which is somewhat bearish. So we have another consolidation period going on here. We should also take note that the parabolic, this yellow dot, is now approaching the recent bar. So it's quite possible that we're going to see that pullback that so many people, including myself, have been anticipating. And if we do get a pullback, it is likely to be a pullback to no deeper than the instantaneous trend line, which is at this level here, which is a little over 23.20. Well, actually 23.26 is where the instantaneous trend line is. So if we get a pullback, a correction, which we've been anticipated, it comes back to the instantaneous trend line. We should find support here once again, as we did here, and as we did earlier, it's not shown on the chart. So the instantaneous trend line throughout this uptrend has been holding as very significant support. And I think once again this will occur since the weekly and the multi charts are looking so strong. Now at the bottom, in the middle of the chart here, Jerry Appel's sum of the rate of change indicator continues to trend up. And even though it doesn't seem to be as accurate on the daily chart of the S&P as it is on the NASDAQ, still showing some good bullish indication here. MACD is still in bullish territory. A little bit of weakness here, but still in bullish territory. And percent R is indicating to us here, since it's above 80, that the momentum of this uptrend is very strong. So let's take a look at the NASDAQ. On this NASDAQ composite weekly chart, we can see that the Kalman filter has remained above the instantaneous trend line throughout this uptrend, and it's still there. Now, at the right side of the screen here, we can see this doji candlestick, doji, very small body, okay, and that's usually indicates some uncertainty, a pause, some hesitation, as I'm sure most of you know. And so it's likely that we are going to see a bit of a pause here, a little bit of a correction perhaps. However, we still have a very strong uptrend. So the correction, if any, shouldn't be that significant. Parabolic is still below the most recent bar, so there's no indication to reverse this uptrend, and we are riding the upper Bollinger Band. That's pretty positive, pretty bullish. We should note, as we noted earlier, we hit that 56.54 somewhere around here. We hit that target we calculated from this symmetrical triangle, this ABCD triangle, and we surpassed that. we went all the way up past 5,800 and we closed at 58.45. In the middle of the chart, RSI 12, that very good trend indicator, is really in very bullish territory. It's trending up above 60. So nothing to be concerned about here. And MACD, even though we had this bearish divergence, never really materialized as a regression in the market. It just didn't do that. MACD continues to trend up. So it's defying the laws of the divergence of MACD on this chart anyway. As we saw, it did on the S&P, the weekly chart there too. All right, let's take a look now at the daily chart of the NASDAQ. So here's a daily chart of the NASDAQ composite. And the first thing we note is that the Kalman filter remains above the instantaneous trend line. The yellow line is a Kalman filter, the blue line is the instantaneous trend line. And when that is so, the indication is that we are in an uptrend. Now we should notice that we rode the upper Bollinger Band, consolidated a bit here as we saw on the S&P, gapped up as we did with the S&P, and consolidated a bit, and this NASDAQ pulled back a bit. But on Friday, we saw a little more strength in the market. One caveat to note here is that the yellow dot that is the parabolic indicator is now contained in the body of this Friday's price bar here, or candlestick. So the way we put that is that the parabolic has been hit. And when the parabolic has been hit, as it is here, we are likely to get a further correction, most likely back to the instantaneous trend line. And we hope to have, of course, the instantaneous trend line serve as support once again before we continue higher. Another thing to notice is that the Bollinger Bands expanded here, and they're now seemingly narrowing. And so when that happens, we're likely to get another nice explosive move, as we did here, as we did up here, as we did here. So the narrowing of the bands lead to another explosive move. So in the middle of the chart, Jerry Appel's sum of the rate of change indicator is still in bullish territory. This is that 4% line that as long as it's above 4%, we should be, I own the NASDAQ, the Qs, QQQ, or the TQQQ. I decide on either one of them. One is leveraged and the other is not. MACD is showing a little weakness here, but that's not unusual. There's no divergence here. And at the bottom of the chart, Elder Force Index pulled back a bit. This tells me that since we hit the parabolic, Elder Force is pulling back. MACD is drawing down a little bit. We are likely to see that correction everybody's been waiting for. So we'll see how that plays out, if it does. Let's take a look at something. And just a quick look at that weekly chart of SSO, the ETF of the S&P that I usually own. As long as the CCI is above 100, I'm owning it. And so we can see that it's still in bullish territory. Let's see something else. And just a quick look at the impulse bars, because we're running out of time on this video. We can see that the weekly chart on the S&P is still green, so we're allowed to own the S&P or buy the S&P. On the daily chart of the S&P, we see we have a blue bar at the right side of the screen, so we're allowed to either go long or short. And since the weekly chart is on green and all the other indicators we looked at look so positive, I say we stay with it. We stay with the long positions. So have a nice weekend, and we'll see you next week. We'll do this again, God willing.